Yo, yo, this is episode 103 of the Beef and Bitcoin podcast. Brett, dude, what's going on? Happy New Year. We're recording on New Year's, I guess. That's pretty cool. January 1st, 2021. What a very shit year, but things are looking pretty green to say the least in 2021 so far. So I guess there's a silver lining sometimes, but how have you been, man?
Been good. It's been an interesting holiday, obviously. Different this year than previous years, because of Corona, COVID, whatever you want to call it, Wuhan virus. Definitely different, in general. I can't believe we've made it to 2021. It doesn't feel like it's been a full year, but interesting times here. And obviously, Bitcoin now is just trading shy of 30K, about $700 shy of it. So we're in the price discovery zone, and all I can say is buckle up, because price discovery and assets can go on for quite a while, as we've seen with like Tesla and other stocks in the past year or two.
Yeah, no, it's a really good point. It seems like all of the money printing we've been talking about for, I don't know, the last like 18 months or so that we've been recording, or 2 years.
No, 2 years. We're really talking 25 months now.
Yeah, that's true. Yeah, man, over 2 years. So that whole time we were talking about credit expansion, increasing the money supply, central banks, the Fed, blah, blah, blah. Well, we got our wish, I guess, in 2020. And, they increased the money supply by over 20% in a single year. I mean, it's like extraordinary, the amount of credit that's been pushed back into the system. And not necessarily directly to individuals, but pumped through the credit system and through commercial banks and loans and PPP stuff and all this, and it's making its way back into asset prices so strongly that Michael Saylor was even mentioning, like, real estate in the Hamptons is up by like 50% in a couple weeks, like during this past summer or whatever, just from Corona and everybody wanting to get out of the city and move. And he's like, people are just flocking to scarce assets. And, I guess I like making the argument that Bitcoin's the most scarce asset just because it's digital in nature. Like, there is a fixed supply, period. I guess you can always build up in the Hamptons, although I don't see that happening. We're in price discovery mode for a lot of assets now, and things are finally like, it seems like the lid has been taken off, and all the money printing is just finding its way into the assets that hopefully will treat it best. A lot of it's made its way into Bitcoin, I guess, both surprisingly and not surprisingly, right?
Yeah, this was, I guess, the conditions that Bitcoin thrives under. Economic distress, globally. We look at the global economy halted for a few weeks at a time, in this previous spring. Obviously, things are, I wouldn't say normal, but things are kind of coming back to normal as best as they can. But on top of that, obviously, the credit expansion or expansion of money supply has been infinite, and rates are basically zero. So it's a hunt for yield for anyone in the wealth management business now. It's where can I get yield, because you can't get yield holding your money in a savings account or a bond right now. So you're forced to speculate in stocks, commodities, Bitcoin, crypto, etc., real estate.
Yeah. There's nothing you can do, right? You used to, if you had $1 million 10 years ago, you could retire because you could live off of the 5% coupon and the interest that you were going to make every year, and you could live frugally on 50 grand a year. That has been taken away. There is no way to easily make 5% interest annually with essentially no risk, right?
Yeah,
that was as like risk free as you could get. Yeah.
Yeah. The only other way I'd look at it is, like, if you could diversify $1 million into maybe a dozen different dividend paying stocks that average out to 5% per year, which still, again, that's a very high. Again, the risk there is that your stock price is greater or don't go against you, even if you're still making the dividend off it. So
yeah,
it's it's definitely again, and I know we've talked about in the past, like lending with Bitcoin and stuff like that, where you can put your Bitcoin up and make money off it. And I think Salt got in trouble, if I remember correctly. We've talked about it before, but Salt's kind of, was it SOL is the best way to put it, shut up luck.
Yeah, I think that they like did a token with their
ICO. They did an ICO in August of 2017. I remember. I almost participated.
Yeah. Yeah, it's funny because that was actually one of the like, I guess in this episode we kind of wanted to talk about where we are today. It's January 1st, and then talk about the outlook for 2021, right? We have the whole year ahead of us, so it looks like the bull market is certainly here. New people are starting to come in. Institutions are making their way in. But what are the trends? Like, what are we expecting to see in 2021? I had made like a quick YouTube video on the Think Bitcoin channel about it, and pretty much what I was seeing is you have Bitcoin transitioning into this must-own asset, right? Like everybody's going to want to get their hand. Yeah, like
overnight. I mean, because everyone shit on Bitcoin back in March, dropped back down to about $3,800, and it was deemed okay. Bitcoin's won't survive any kind of, because that was a shock to the whole system. It wasn't just Bitcoin that dropped. Gold, silver plummeted, equities plummeted. We saw rates get nuked. I mean, everything was nuked. And I like to bring that back up, actually, keep it, because I think there's an important point of Bitcoin, and I think, because I've seen it before in the kind of crypto Bitcoin community, is like, oh, people are like, oh, we should, we want to see, equities nuke. And I'd like to counter that. I don't think equities nuking is good for Bitcoin. Like if we were to redux what happened in March last year, it wouldn't be good for any other asset outside of equities. I like, even as strong as Bitcoin is right now, like if the S&P 500 were to do what it did, like, and just lose 25% of its value over the course of a couple weeks, like, everything would be sad. Like gold, silver, Bitcoin would all just get nuked again, because you'd have a bunch of people selling those assets to cover for their losses in equities.
Right. So. No, yeah, it's a good point. As like the diehard Bitcoiner in me is like, oh, F stonks, let them dump and let Bitcoin go to the moon. But the reality is, if stocks sell off hard, like they did in March, it's definitely not going to be good for anybody, right? Like, Bitcoin takes it down, like
the land of no bid.
But at the same time, I do think we're in the midst of, like, in the coming decade, we're in the midst of like a repricing event where like things are going to be repriced in a new unit of account, or something that people are actually going to start thinking about what they want to accumulate, and then the asset prices will reflect reality, right? So like I've told you this before, there's a 2-bedroom condo in the building that I live in for sale for like $1.1 million with $15,000 a year taxes and a $600 a month HOA. So like, I know that needs to be repriced back into reality, but that doesn't necessarily mean that it's not going to be selling for $1 million in 5 years or at the same price it is today. But I'm hopeful that $1 million or whatever is different when compared to other assets like Bitcoin, right? Like if the condo is still worth $1 million in 5 years, what the hell is Bitcoin worth in 5 years? Well, I'm assuming it's going to be worth significantly more. So like that in itself is like a repricing against another asset, whereas everything versus the dollar, you're getting smoked on every asset class by like 15% a year, at least on the shit that you want, like a house.
Yeah. No, it's quite incredible that, in some of these cities around the globe, because obviously not just the U.S., it's just how expensive real estate prices are, just how eye-gougingly high they are for such small pieces of property. Like you could look at $1 million, home in Los Angeles, and it's a piece of shit. But, and it's a tiny lot, maybe 1,000 square foot house or smaller, and it goes for $1 million, and then you go look, say Montana, somewhere else, Wyoming, somewhere,
even
just
Arizona,
anywhere, just that, and you're like, wow, $1 million gets you all this acreage, a nice house, a couple garage spaces, and it's mind blowing. And I even, I'm from Detroit area, and even seeing different areas in Detroit real estate wise, it's always interesting to me, real estate, in the nicer suburbs, how expensive homes are, but your property, obviously, you get tighter and tighter lots and whatever. And then you go to some of these areas outside of Metro Detroit, and these people, have a couple $100,000 property, but they have a big home, all, a whole acre to themselves or 2 acres. And it always it interests me to see that.
I'm expecting those assets to not necessarily have their grand crash and all this stuff, although it's certainly possible, but they just need to be repriced back to reality. Like none of it's realistic.
Dude,
I don't know that you could. Yeah.
Go ahead. But
I was just going to say, like, you can't. I know that interest rates are going to have to be kept down as long as possible, but it has like the counteracting effect of like they can't stay down forever, but keeping them low pushes up asset prices. So eventually it will work itself out where interest rates will go back up again, and then reality sets back in. Because even as we were talking about like the dividend paying stocks, Apple pays a 1% dividend. That's like nothing. Like it's great that they pay it, but you're almost betting on the price appreciation at that point as like giving you your yield, right? That's why a lot of this stuff is really wacky.
No, I was just gonna say, I was looking at this gold chart here, and if you're watching on YouTube, you can see it. It's basically the whole length of the gold price history where it was fixed against the U.S. dollar when it was like $20 up until the fix in 1935. And then eventually, obviously, in 1971, when it was allowed to change prices more. Well, that started to change in the late 60s, but with the London gold pool unfolding. But anyways, from the peak in 1980 of like basically just shy of $900 an ounce, I mean, it is incredible that it literally took a whole of 27 years to repass that high. I mean, could you imagine just being a holder of gold for 27 years? I mean, that would be miserable. Just getting crushed.
Yeah, I mean, I guess I forgot that it really was that long of a
almost
not
3
a
decades.
bear market. Yeah, it's a long fucking time. I really hope that doesn't happen for Bitcoin. But no, but one thing I wanted to point out was even if it did, look at the bottom of the gold price after kind of that breakout from 1970 on. So, the lows were still like 20, I mean, lower to your left, like before 1976, even before that. Yeah, so before it took off, yeah, it was, it was
when
like
the government had it
50,
fixed.
$60 an ounce.
Yeah.
But still, that next bottom was 10x from where it was before it took off, right?
Yeah,
Even though it had that full bear market for 20 some years, it still 10x'd and kind of stayed above that. So even if, I guess that's where, like, I don't know, dollar cost averaging, or if you're like always storing your wealth in gold, then it is what it is. But I guess this was, yeah, it's interesting. Yeah, but it's funny because the chart looks exactly like the Bitcoin chart. It's like every cycle is like 2 decades long.
Yeah, it's just
like
longer.
4 decades for Bitcoin.
That's
4 years for Bitcoin.
That's always what blows me away with crypto and Bitcoin. It's just how quick the cycles are.
Well, dude, think about it. If it trades 24/7, it's going to play out that much faster.
Yeah, like that's why this price discovery is happening all the time.
24. Exactly. Dude, Mike Saylor was saying that in one of his interviews when he was talking about like the holiday week of like that Christmas week, I think, of like trading hours and into the holidays. He's like, for the next 2 weeks, the markets are going to be open for a couple of hours, and like Bitcoin's going to trade that whole time.
Yeah.
So when you think about it that way, it's like, oh my God, it's trading like 5% of the time, and Bitcoin's just always trading 24/7. So I guess that's why I love that the cycles play out that fast. It's like a regular market seemed like so slow to me now. I don't even look at them anymore, actually.
Yeah, no, dude, it's super slow. It's like almost like painfully slow. Like I know I have the S&P quarterly candlesticks open, so it's 4 candles a year. And this cycle, I mean, at some point this whole thing breaks down. Obviously I thought the world was over in March for the most part, but we got saved because basically every central bank and government intervened before it could get real bad. And so instead we just got trillions of dollars of free money. And obviously most of it went to very large corporations or governments, and the people saw nothing. But it's interesting because the U.S. basically became a socialist country under Donald Trump, and we started handing out free money. And we're going to really see the inflationary consequences here soon. Like I don't follow politics super closely, but there's that $2,000 stimulus that's supposed to come out shortly, or maybe people have already received it, but that's going to be directly inflationary. If 100 million U.S. citizens receive $2,000, that's, I don't know what, 2 billion. I don't even want to, is it 2 billion or 20 billion or whatever that just gets freshly
I don't know.
right in.
I'm bad at quick math when we're
live. So it's if 100 million, so it might be 20 or 200 billion that is just able to be put like by people to go buy, whether like food at the grocery store, put a down payment on a car. It's going to drive everything up. Everything is going to go up, every appliance. But what's going to more so than that is going to be like the food and groceries and stuff like that, things that people need, healthcare. It's going to get ridiculous here, and
food and groceries I noticed already this year with just like meat prices and stuff. But it could be a couple things, right? On one hand there's like the monetary supply inflation, but then on the other hand there's also, some ranches like close down, like there's less meat,
there's less supply, right? So there's more demand.
And that part, so a lot of it makes sense, but yeah, the real thing is, okay, if they give 100 million Americans $2,000, like that can definitely be inflationary. What if they just keep doing that though? That's more, what if they do that again in the first quarter and again in the second quarter? Next thing you know, it becomes, it was a one-time thing to do these $2,000 stimulus or $600 or whatever. If they keep doing that, that's when, the compounding effect of all that extra money sloshing around. And don't get me wrong, I guess if I had to choose, like give it to people rather than like a PPP scam loan or something. But regardless, you're debasing the currency anyway, but nobody realizes that like taking the free money is going to make it worse. So, but you also can't like not take it, I don't think. So like I don't think anybody has a choice in the matter. It's like,
you're just
on one hand you don't want to like cheer it, but on the other hand I don't know that you could even stop it if you wanted to.
No, I don't think there's any stopping it at this point. It's going to be interesting to say the least here. And like again, another area where this is affecting is like the car industry, because obviously a lot of factories and plants close down. So all these major auto producers are behind on making their 2020 and the 2021 models. So there's been a huge shortage of new cars, and then also the same thing with used cars. You're seeing a lot of I guess I don't know if you want to say dealerships or auto companies and banks that are offering to buy used cars because there's literally no used cars. Like you can drive past used car lots and stuff like that, and they're just shrinking by the day. So it's interesting to see all this play out. And part of it, again, with the rise in the car prices is inflation. But the other part is just the supply and demand, because there was a period of time this year, or even more than that, really, because you got to think about these factories. Anytime someone gets COVID, they just shut the line down. So it's like, we're not making a new car for the next 48 hours, which is a huge deal, because these factories run like 3 shifts around the clock. So.
Right. No, yeah, all of that really plays in, and it makes it difficult. Like being forced to not operate at 100% efficiency and capacity, regardless of whether you're an auto manufacturer or you're like selling burgers at like to the local community. When the state kind of interferes with you in any way, regardless, it has impacts that are hard to foresee, and it makes staying solvent really difficult.
And I don't even know where to start with small business in America. It's been devastated completely. I don't care what people say about like, they got free money. Like so many small businesses, like restaurants, obviously, especially in the service and bars. But, they've been crushed and forced to close, while like the Walmarts, the Amazons, the major like grocery stores like the Publix, the Krogers, etc. have stayed open. So it's kind of a bummer to see, because it's like, it feels like we're getting pushed more and more towards this control, the Great Reset, they call it, that's now becoming pushed by mainstream propaganda. So it's kind of sad.
Yeah, it definitely sucks. The whole thing sucks for sure. Like, yeah, that's still, I guess, on my 2021 outlook that's gonna suck. But There was actually something that you had mentioned earlier that I wanted to touch on was like the borrowing and lending of Bitcoin
Hmm.
and digital assets and stuff like that. And while it's not something that I do today, I do foresee that being and growing a lot in 2021. Um, people are going to want to borrow against their Bitcoin so they don't have to take the tax hit on it, right? It's great collateral, and if it increases in price a lot, you can still with a like a 50% loan to value. Like if Bitcoin goes to 100,000 and you have a couple Bitcoin and you're like, oh, I need 50 grand. Boom, you could lend one Bitcoin or borrow against the one Bitcoin, take 50K out and do what you need to do, pay back the loan, and don't take the tax hit. And then on the flip side, there's lending markets that are really starting to grow. I think the interest rates for Bitcoin from BlockFi is like 5-6% or something like that annually, which isn't that bad. I think it's 6% for the first two Bitcoin, and then it drops down to like 3% for any BTC after two. But I mean, that's pretty strong. Like, there's your 5%, there's your 6% figure you were looking for. You won't get that, putting up $1 million worth of Bitcoin. It'll be lower than that, but the market's developing now. Obviously, there's risk to lending. This isn't your FDIC typical checking account bullshit. Like, you can definitely lose your coin if you get an event like March where there's just like a 50% drawdown in a day. Yeah, like you could definitely need to post more collateral or something or have your Bitcoin called away. That's like it can certainly happen. But I think that market will just continue to grow. These lenders will build up insurance funds to help cover for that, and that'll eat into their profits a little bit. But I think it's still in their best interest. And once that market matures, it'll be sick because then you'll have more coin moving around, being lent out for more productive processes rather than just sitting on it. I hope it grows and becomes less risky as Bitcoin's volatility decreases. But I definitely see that as a trend for 2021. And the reason I think that also is just because if you just had the Grayscale chart
Yeah.
that was up, the inflows for Grayscale this year were billions of dollars worth, and then they also had the price appreciation. So right now there's almost $18 billion worth of Bitcoin in the GBTC fund, and they have over $20 billion worth of assets under management for the rest of the shitcoins and stuff on that list. But it's pretty impressive. So you have all this institutional money coming in. They're starting. This is just them dipping their toe too. This is just GBTC. Like, this isn't even an ETF yet. This is the best you can do. You go with Grayscale. Once there's going to be $100 billion worth of GBTC at some point in the near future, and then eventually, as people get more comfortable, they're going to want to explore other ways to, whether it's earning yield on their Bitcoin, whatever markets mature from the borrowing and lending side over the next couple of years, they'll get interested, and that being able to do that will also drive in more money that is thinking in terms of cash flows rather than like a tax deferred price appreciation, right? Like, I'm just speculating. I just want to sit on it, right? I'm like, yeah, it's going to be worth more every year, or hopefully, and then when it's worth more, I can do with it whatever I want. But maybe like a real estate investor, somebody else who's used to thinking in terms of annual cash flows or interest rates and stuff like that, as the yield curve develops with Bitcoin, I think that will drive in a totally new type of investor who's not just interested in price appreciation. Well, I don't know. What do you think?
The Grayscale, again, as you and I have mentioned in the past, is a great thing because it takes away the guesswork of buying Bitcoin on whether it be Coinbase, Kraken, or Bitstamp, or any other exchange. There's obviously a gajillion exchanges, but it takes the security risk completely out of the way because, for the 50-year-old, guy who wants to buy, say, 20 grand of Bitcoin, but they don't want to go do it on Coinbase, and they're worried about storing it properly. Well, this is the way to do it.
Yep.
I mean, granted, you're going to be paying a premium on your shares, but it's like, it's easy because, oh, hey, I can just, put I can do it in my Schwab account. I can do it in my E-Trade account.
Right.
Or they can call their broker and ask them, hey, I want 1,000 shares of GBTC, and it's done. Obviously, GBTC only trades during normal market hours, but it still gives you access to Bitcoin in a way to track the price of Bitcoin. To note that Grayscale it's at $20.2 billion assets under management, and Bitcoin's roughly 17.5 billion. The Ethereum Trust is about 2.2 billion, and then the next biggest one is the Grayscale Digital Large Cap Fund at about 250 million. And I was wondering, did you have an idea of what the Horizon Trust was?
Yeah, I'd never heard of it. But yeah, dude, I don't know. I think even my sister-in-law's boyfriend told me her dad or his dad was buying GBTC. I was like, oh, okay. That's like good. That's good. I'm like getting hints now. I'm like, all right, people are starting to look into it. They're curious. They just maybe they want to use GBTC. My coworker has some GBTC, and so I think, I don't know, it's just the easiest way to do it right now until there's an ETF. Here's my other 2021 outlook. If we get an ETF, it's gonna be like in 2017 when the futures came out and like popped the bubble. It's gonna be like
that's
as soon as the
you
ETF
get an ETF,
comes out,
dude, it's over.
Top is in.
You get an ETF, it's all over.
Yeah. It's like I don't know.
I was hoping we were going to record this podcast and we crossed 30K, but it doesn't look like it's going to happen. Though, if I had to take a guess, it's probably going to happen sometime by the time this is released.
Yeah.
I don't think 30K is going to be a big psychological number, obviously. It's really the next step. And whether we nuke there or just blast through, I don't know. But it's a big psychological number. There's no way around it. Like, there's going to either be a lot of, for all we know, there could be a lot of sell orders there or just, whatever. But we'll see.
20K took some time. It took a month. 20K took a month as we got close to it, and
we were there for a while.
Around it.
We were there
danced
from
around
November.
it, didn't touch it, and then right through it.
Yeah. But I mean, again, that's I would say that's a little different because that wasn't price discovery. That was still kind of at the basically a supply zone is where you were at, and that's why we took a while. There was a supply of Bitcoin there, and there were buyers and sellers,
Right.
And there was obviously little volatility, but really not that much. And I hate to say it, we really haven't seen that much volatility this run up relative to other. I mean, when you look at the run up in 2019, I mean, there was a shit ton of volatility from that December 2018 bottom. There was a lot, and then obviously 2017 was a whole other story with the pullbacks we had that don't seem that big, but when you live through those pullbacks, they were big. Like living through those
were most of those were 30% plus.
Yeah,
I mean they were,
and that doesn't include the fact that when Bitcoin nuked 30%, your whole of your altcoin portfolio was down 40 to 50, 60%.
Right.
Like, so, this is gonna be
the volatility is different, dude. I feel like it's just getting bid up this time around, and every little dip, it's just being soaked up really quickly, which it doesn't look like that in this chart. But if you switch it to log, it's not that crazy.
It's going to be interesting. I mean, when you look at the older log charts, like where you broke out in 2013, where it just goes
I think we might see
up.
a 2013 redo, like where it's like a double pump, where it could do something really wacky. Maybe it goes way higher than you think it could go in the first couple months of the year, and then
this
takes a breather.
This could totally go way fucking beyond what we imagine. Fast. Like we could be. I'm not here to speculate, or I am here to speculate, but I'm not here to fucking sell you a bridge or anything. But we could be at 100K by fucking March or end of March, but then come back down to God knows what. You know what I mean? Even if it was a pullback to 40K, that's 60% drawback.
Yeah. It's funny because this is the first time I'm living through the beginning of a bull cycle, going from a bear to a bull. So I guess in 2017 I was probably getting in nowish in terms of percentages, even though it was really spring of 2017. It seems like we're shifting the timeline up a full quarter that we've taken off here in price. Last time it took a little bit longer. So if you look at where spring 2017, it pretty much just went up the rest of the year. It had its big pullbacks and everything, but when you're looking at it on the monthly candles, it was just green the whole time.
Yeah, pretty much.
Seriously.
No, it's just green.
I mean, pretty close. Like, yeah, inside of those candles were big 30% pullbacks.
Yeah.
Maybe the pullbacks are only 20% this time around, or 25 or 15. They've seemed pretty muted so far because the dips keep getting bought up very quickly. Now, with that being said, there's no guarantee that demand continues, right? This is just an assumption. Either demand has stayed the same, you have a group of, I don't know, 1 million people on the planet who are consistently buying Bitcoin every single week, right? And then you have all the people who are using Fold and all the people using Strike, and it's not a lot, but it's like this baseline that's building. So now we just had the halving, so the supply's cut in half. I've also heard rumors that miners are doing their absolute best to hodl that coin as long as humanly possible and not have to dump that to cover their electricity costs, right, and their operating costs, right? They're like raising money and then mining and then probably using a lot of what they raise too on R&D and whatever, but also to cover their electricity costs. So they're better off holding the coin as long as possible if it's going to go up in value so much. So yeah, if there's less supply, demand's pretty much staying flat. But if institutions really are coming in, if high net worth individuals are coming in, if professional athletes like Russell Okung, who said he's going to convert half of his $13 million salary into Bitcoin, if more people are going to start doing that on a go forward basis,
is that his annual salary?
Yeah, his contract is 13. I think it's either 12.5 or 13 mil a year, but he's converting like between 6 and 6.5 million into Bitcoin.
Dude, that's just so much money. Like, people don't realize. My cousin and I were talking this other day. Like, it was something about like, I think it was like from like someone who looks at like there's like 500. If you had a net worth of $50,000 or whatever, to someone who's $1 million, that's what it's like from like $1 million to 10 or 500K to like 10 mil, you know what I mean? Like this, like at that level, if you're making 13 mil a year, it's just stupid money. It's just, I know there's taxes and agent fees and whatever, but like, there's just, I mean, like, you have to try to spend that much. You really do.
Yeah. And I think he's going to look like a fucking genius by taking half of his income and buying Bitcoin with it. Because he's giving himself a tax deferred raise.
Yeah.
Like that's what Michael Saylor from MicroStrategy keeps saying. He's like, if Bitcoin's going up 100% a year on average, it's actually more than that, but he was like being conservative, tax deferred. He just gave himself another $6 million raise for the year because he's buying $6 million worth of Bitcoin. He's like, well, it's just going to double every year. And I'm going to hang on to it because I make 13 mil a year. I'm not going to need to spend it anytime soon. So like, and that's just going to keep growing and compounding. He's going to keep doing it. It's not like he's going to do it this year and not do it next year. Yeah. And I think don't underestimate how many people will start dumping like half of their disposable income into Bitcoin when they start thinking about it differently, not like trying to buy it, hang on to it. They're like, oh, fuck, I might as well just like accumulate as much as I can. And hang on to it as long as possible. I think he's going to set the trend for sure because there's no shot that you're going to get these sports contracts in Bitcoin in the next 5 years. It's way easier. He collaborated with Jack Mallers and the guys who built the Strike app where you can like pay Lightning invoices with Bitcoin and stuff. They're using it so you can get a direct deposit from your check right into the app and it'll just convert it into Bitcoin right for you at like a fixed percentage or whatever. So it's like instantly converting your paycheck. So like that's a good workaround. You don't have to have these contracts fucking done in Bitcoin because nobody wants to deal with that because nobody fucking knows what Bitcoin is.
Yeah,
so
no, it'd be a pain.
It's easier if you can just do it yourself.
Yeah,
you're not going to have a conversation with your GM about like getting your contract renegotiated and paid in Bitcoin. The guys are going to be like, here, listen, take the 10 mil, shut up, and buy whatever you want with it. So
yeah,
they're right. Like you should be able to do it easier yourself, and I think it's solving a good problem. I like it.
I'm just curious to what's going to be our next reason for equities nuking at this point. Like we all know that it's all bullshit. Like you don't look at Apple, and I know they did a share split, but like it's a $2.2 trillion company or something ridiculous right now. Like if you were buying Apple right now, I know they did a share split, so like retail thinks that they're buying a cheap company, but it's a $2.25 trillion market cap. I mean, like, okay, for you to double your money, it has to go to 4.5 trillion. Like, these numbers are just getting so far out there now. It's just insane. It blows me away. It's just like Tesla is literally makes less than 1% of the world's cars. It might even be less than half a percent. Yet, it's worth more than like literally all the auto manufacturers combined in the world. Like you take FCA, GM, Ford, BMW, Mercedes, Volkswagen, put all those together, and Tesla has a larger market cap than all of those.
Yeah, it is incredible.
Like I hate to say, at some point reality is going to strike. I don't care what amount of inflation, reality will strike this market. Tesla's 670 billion roughly. That's just not real. There's, like, the only reason they're profitable is EV credits that, they're like FCA and GM and Ford buy because they don't make enough electric cars. At some point, I mean, dude, Kathy Wood's price target is basically right. I think I mentioned it last podcast or whatever.
Yeah, she 4,000. Like 4,000.
Yeah, and Tesla did a 5-to-1 share split. So at 705, technically it's really trading at 3,500. So she basically hit it on the money, which is absolutely bonkers. But it is what it is.
Yeah. It's impressive.
But like at some point, reality is going to strike back this equity market. I don't know what will cause it. I don't know what the catalyst this time is. I don't think the markets really think coronavirus is serious, and I can tell that, or at least that it doesn't see coronavirus as a real big deal. Let's just put it that way. Versus last year. Yeah. Like it doesn't view the actual COVID or whatever you want to label it as serious because it really isn't. Like a perfect example is like Wuhan, China yesterday or whatever because they're ahead of time. They're out there celebrating New Year's like no big deal. Meanwhile, like in New York City, it's a ghost town. In Los Angeles, ghost town. Like you can't it's China done played the world. And I mean they literally sped up they literally sped up their process to be the number one, superpower. Is basically what they just did in the past year.
Yeah, it's pretty. The 4D chess is pretty crazy.
Yeah.
But I think you nailed it actually. That I think the markets are pricing in what maybe is already priced in, quote unquote, in China. Like life kind of is going on and it's going to be okay. So yeah. I do think you're right that the markets are kind of pricing that in, and which I guess is better than not. Yeah, really incredible looking chart. Really incredible, and it just makes me curious. I guess last year was really wild. In 2019, when we were recording leading up to 2020, it was like getting pretty wild, and now I don't even know what to think anymore. It's the first day
all
of the
those
year,
stocks that just
it's gonna be a long year.
Like I always love to use Square as an example because I think that chart's just retarded. Like, off the deep end, but nope, back to new highs. Like if we aren't close to an actual generational top here, it's never been easier for retail to buy, equities or options or whatever, buy fractional shares. I mean, like whenever I see like any kind of commercial that is like retail gear, you know what I mean, towards like retail investors getting into buying equities and stocks, I'm just like, we gotta be getting close. Like they're doing whatever smart money. Sorry, go ahead.
No, I wanted to talk about this because I think it's an interesting point, and I was like, I was talking to my wife about like investing and other stuff, and it hasn't even crossed her mind to take extra money outside of what she puts into her 401k and what she's a really good saver, and like put it into the market. It's not something that she's super comfortable with, and I think there's so many people like her, or even anybody, millennials, Gen X, Gen Z, who like it's not fully mainstream where everybody is buying fractional shares yet and all this other stuff. So like on one hand, it's like retail's definitely coming in. There's a lot of growth on Robinhood. There's a lot of growth on Cash App. But I still think a lot of people are hesitant to kind of get pulled into the market. I don't know if the price needs to go up more to like draw them in, or if it's really, maybe
I think some
millennials
are
a lost cause. Like, Yeah, I think a lot of people are scarred. Even my wife was like, well, what if I buy stocks and they go down and I lose all my money? And I was like, well, it can happen for sure. But a lot of people think like that. And I don't think a lot of people have a super long-term view. I'm not sure how much more growth there's going to be in that, but maybe there is, and I'm totally wrong. Like when I play with the Cash App and I'm looking at, you can buy fractional shares of stocks and all that stuff. I'm like, this is pretty impressive. It's a bank, it's a Bitcoin wallet, and you can buy fractional shares of any stock you want to buy. It's pretty fucking sweet, actually. All of that on your phone. Like I don't need my bank account and all the hardware wallets and my E-Trade, Schwab, Fidelity account. Like it's all in one app on your phone. So as a lot of these financial services start to like collapse into one application, maybe it'll like keep picking up. But I still think it's hard to get that first sell of getting people to, of retail to like get comfortable investing. Maybe Gen Z will be like the generation that leads that, like on the mobile side. They're like always investing. I'm not sure yet.
Yeah, it's coming around though. I mean, it's gonna happen soon. Something happens soon, and when I mean soon, it's gonna be this quarter. I think all this nonsense that now it's 2021 and 2020 is over and things will just get better, magically better, is wrong. I hate to say it. I'm not to be the bearer of bad news, but like, it's gonna be a tough decade. I hate to be that guy. It's gonna be a tough decade. Like there's a lot of things going on, a lot of moving pieces here.
Yeah, it's definitely going to be a tough decade, and it's certainly going to be easier for some than others. And the best thing you can do is to like, number one, do your best. Like, try to accumulate as much wealth as you can in whatever way you think is best for you, and like just keep grinding. It is going to be a wild decade, but I'm trying to be as optimistic as possible. Although the first year, 2020, while it wasn't, it sucked when everybody made the best of it. I think, I'm going to try to be more optimistic going forward.
I mean, I'm a fairly optimistic dude. I just look at things with a real lens. Considering the amount of money printing and the destruction of small business. And not only that, the psychological damage to people this year, being locked up, not being able to see loved ones and friends and family, and like losing social contact. Like, I don't think people realize we're social beings. Like, we need social contact, and I can tell you that. Because like right now I'm at my place alone, and it like you just like fuck, I'm alone. It's like shit.
No, yeah.
It doesn't help that like you just like I'm in a state right now where you can't go out or anything like that. So it's one of those. It's like fuck, But like, and I deal with it. I'm more of an introvert, but like shit, I couldn't imagine being an extroverted person this year. You'd be just devastated.
Yeah, no, it's certainly been a tough year. I think people are going to want to be social again in 2021. Hopefully they do and start going and seeing people. But dude, I think that this was a good episode. I mean, there's a lot to look forward to in 2021, especially when it comes to Bitcoin. Obviously, everybody's excited about the price. Everybody's excited about the new institutions coming in. Everybody's wondering, is Tesla going to buy Bitcoin? Is Apple? Are there any, big names that are going to come out there and put Bitcoin on their balance sheet? We'll have to wait and see. Definitely think Bitcoin rewards are going to be huge. People are going to be signing up for Fold and Lolly and BlockFi and all this stuff from the consumer side. So I'm excited about that. But yeah, I mean, number go up. It's been a long 2 years recording. I feel like we've been vindicated a little bit here. That
vindicated a lot of it.
Finally,
price drives adoption. There's no way around it.
Yeah.
Number go up, people come. Number go down, people leave.
That's right.
That's simple.
It is that simple. I mean, you're definitely right about that, dude. Yeah, but that's a good way to wrap it up. This was episode 103. Make sure to like and subscribe on YouTube, Apple Podcasts, Spotify. Leave us a comment on all of those platforms. Shoot us a DM on Instagram. Let us know what you want us to talk about. And, cheers, Happy New Year, and welcome to 2021.
Godspeed, everyone.